Okay, everybody, it is me, Gregory Mannarino. It is Sunday, September 18th, 2022, and this is, of course, my newest segment of Markets, A Look Ahead. I was going to say lovely, but it's always lovely. I love being here with all of you. It's kind of like my thing. All right, look, let's talk. We got a few things I want to cover here with you. Some of it's not going to be a shock or a surprise, probably none of it. But we keep hearing more and more of the same. What am I talking about? How our economy is not doing very well. We're getting warnings from more CEOs of corporations explaining that things are not as lovely as they're being portrayed here on the mainstream propaganda ministry. And man, is my shock here. But this week is pretty big. Why? We're going to hear from public enemy number one, the Federal Reserve, Wednesday with their monetary policy announcement. Let's just set this up right now. We're going to get a rate hike this week. The question really is how much? 75 basis points, 1%. To me, it don't matter at all. Honestly, I believe that a 75 basis point hike is baked in. If the Federal Reserve were to shock the market with a 1% hike, the market's not going to like that. But the bigger picture isn't really, again, what the Federal Reserve is doing here in their so-called attempt, okay, to slow down inflation, which is not happening. Look, this is crazy. Bank of America, this is what they're saying. Inflation shock is not over. Oh, really? You mean inflation is going to get worse? Yes, of course it is, and you know that if you've been following this blog. The Federal Reserve, for many months now, has been incrementally raising that federal funds rate, and they're going to do it again this week, and it's not going to do a damn thing to slow inflation. Although Jim Cramer, our favorite market analyst, oh yes, he's saying that the Federal Reserve is doing a good job and they're actually, raising confidence in the market and inflation is going to get better. The man has lost all credibility, in my view, a long time ago. I believe in yours as well. He's shilling here for the Federal Reserve. And again, the definition of insanity can be defined as doing the same thing over and over and over again and expecting a different outcome. So the Fed's going to raise the federal funds rate this week, 75 basis points, 1%, whatever. It's not going to do a damn thing. We already understand what's also going on here in the background. Central banks around the world continue to inflate, okay? And we have this issue, a huge issue, with the debt market selling off. Global bond yields continue to rise, people. 10-year yield, 3.45. Kind of stuck in a range here towards the end of last week. I'm not convinced, at least at this point, although I have been saying that I believe the Fed's going to get in here and do more. They really haven't. We've seen the phenomenon here of rising global bond yields, the 10-year yield continuing to show some sign of instability in the fact that, again, bond yields, 10-year yield continues to rise here. Dollar strength, that's another thing that, you and I have understood for quite a long time. I don't even know how long ago, maybe over a year ago, right here on this blog, we discussed how the relative strength of the dollar would continue to climb. Now, I'm not convinced at all that we're done with regard to seeing the relative strength of the dollar, that is its value compared to other currencies, rise. I believe it's going to continue to rise here. We had a break above 110 on the Dixie recently. We came down a little bit. But the combination here of the stronger relative strength of the dollar and global bond yields rising, that's a big tell here, people. What is it a tell of? Again, the bigger problem here is the issue of instability in the debt market. It's a time bomb. I wrote an article yesterday. I posted it in my free newsletter. Link in the description of this video. Check your email box if you are subscribed to my free newsletter. If you are not subscribed, please do it and check out this article. I explain to you what's going on here. And again, I've actually said this in these exact terms for a while, that the debt market is a ticking time bomb. It's ticking louder. It's ticking faster. We're starting to see the side effect of what central banks collectively have been doing for years, and that is inflating, buying debt, creating currency out of thin air, and now we're facing surging inflation with no end in sight. Don't take Greg Mannarino's word for it. Listen to Bank of America. Inflation shock is not over. I mean, come on. They can't stop this. And again, what you're never, ever going to hear from the mainstream propaganda ministry, from a Federal Reserve president or chairperson, is by raising the federal funds rate. This is what they're trying to convince you of. It's the biggest lie in the history of the world. Okay, literally, probably one of the biggest lies in the history of the world. By the Federal Reserve raising that federal funds rate, which is the overnight lending rate. Okay, they want you to believe that it's going to somehow miraculously slow down and maybe even stop inflation, kind of like the Inflation Reduction Act. Hundreds of billions of dollars being pulled from the future, and that's going to slow inflation? No, it's not going to do a damn thing. In fact, it's going to create even more inflation. But look, that's the story here. It's the deceptions, the distractions, and the frank propaganda is just going to continue and go on and on and on. So, anyway, let's refocus here. So this week, again, as I said, you got the FOMC, Federal Open Market Committee meeting here, and they are going to raise rates. And then you're going to hear all this kind of bullshit about how our economy is doing well, and you know, everything you can think about to twist your mind. This is what they always do. I am not sure how the market is going to respond to this. If it's a 75 basis point hike, the market's going to take it in stride. A 1%, and I don't know what they're going to do. I'm being honest. I think if I had to pick one, if you're going to ask me to do that, I'm going to say a 75 basis point hike because it's already baked in. The Fed's watching the market, believe me here. Are they really at that point where they're going to allow the debt market to implode? Look, it's possible, but I don't think so. I still believe central banks, none more so than the Fed, are not done buying assets with their product that they create out of thin air. Imagine just for a moment. Imagine for a moment having the power to create currency and do whatever you want to do with it. It's way, way worse than a Ponzi scheme. I've related to this or referenced this as a Ponzi, but it's way worse than a Ponzi scheme because this organization here, the Federal Reserve, other central banks, can literally create out of nothing as much currency as they want to, and then do whatever they want to do with it with no oversight at all. Does that sound right to you? Do you see the current environment here? Look, globally, the economy is failing. Duh. Globally, inflation is surging. Duh. Who is responsible for the entire financial system and the global economy? It's not our policymakers. Oh, big surprise. Shock here, right? No, it's central banks. And nobody is being held to account. Nobody will be held to. All you're going to hear from the propaganda ministry is, oh, this is what the Fed's going to do next. What happened to data dependent? What happened to they will raise rates as appropriate? Do you remember all that? Yeah, that's all just gone now. It kind of vanished. And now they're just focusing on what the Fed's going to do. And they're trying to convince you again that the Fed's actions by raising the overnight rate is going to somehow miraculously cause inflation to drop. And all they're doing is repeating what they've done month after month after month. And inflation continues to surge higher. This is deliberate. You are being squeezed to death. Now, I want to bring this up too, and I want to hear from you on this. So the CEO of Chevron is warning, are you ready for this, of much higher energy prices coming this winter. Do you think he knows something that you're not supposed to know. We already heard this same warning from Janet Yellen. Janet Yellen, you know, the troll, the thing, whatever it is. And I'm not making fun of an old woman here. It's not even human, whatever that is over there, okay? Former Fed chairperson Janet Yellen. She herself, like 2 weeks ago, itself said a few weeks ago that we were going to see higher energy prices moving forward here. Absolutely we are. And again, this is another way to strangle the middle class to death. That's literally being made to become extinct. That's what this is all about. And the propaganda ministry is playing right into it. They're just fist feeding people garbage, nonsense, dog shit, cat shit, whatever it is, to try to convince them that what they're seeing themselves is not real, that the Fed is actually going to do something about inflation. Central banks around the world, they're really going to do it this time. And now they're pulling out Jim Cramer to back that up too. You got to be kidding me. You got to be kidding me. Look, all of you out here who follow this blog are clear, crystal clear as to what is actually going on and what to do about it. Again, what does this mean? We could sit here again and talk about all the shit that's going on, but what are you going to do about it? If you know yet again, global debt is going to continue to surge out of control, debts and deficits, what do you want to do? What do you want to do? You want to be on the opposite side of that trade. Now, I don't care what they do to physical gold and physical silver prices via the derivative being rigged by JP Morgan, the super bank, and other banks as well to keep those prices suppressed here. You do realize, again, and I wrote this in the article that I put out in my free newsletter yesterday, every asset today derives value, not just the stock market itself, real estate especially as well, derives value from action in the debt market. If rates have been artificially suppressed now since the last meltdown, how can a single asset today have a real price discovery mechanism behind it? You can't. Does that make sense to you? Not only is the stock market itself a derivative, meaning it derives value from something else, and the other thing is the debt market, but so is real estate. Why do you believe or think for a nanosecond that central banks around the world, none more so than the Fed and European Central Bank, these two entities that always work in tandem, have chosen to get in here and buy all the debt, keep rates suppressed? They can't just say it. They have to get into the market and make it happen. Why is it that these central banks have chosen to take the biggest part of the market, the debt market, and rig rates to the downside? Well, it's very simple. To reinflate a bubble in the stock market and to reinflate a bubble in the real estate market, number one and number two. And then again, the ripple effect is there's no price discovery anymore for any asset because, again, action in the debt market dictates the price action of other assets, all other assets, by the way. And with regard to even cryptocurrencies, look, this is also another part of the market here that unfortunately Wall Street has gotten its ugly hands in. And I wish that never happened here, but there's a lot of rigging going on there too. I think that's pretty obvious. All right, look, I'm out of here. Kind of a longish video. I didn't even want it to be this long, but that's what we got. People, this guy here loves you a lot. Please comment. What do you think about what I have spoken about? Does it make sense to you? Did it ring a bell for you? Did you hear something here you haven't heard before? I want to hear from you. Like I said, please comment. Let me know what you think about these things. And please, if you're part of my team or you consider yourself a part of my team, share the video. Get it out on your social network. Start talking about these things, okay? I'll see you all in the morning. I'm out of here.